Welcome everyone. Great to have you all here. We're also streaming this event tonight, so welcome to all the people who're streaming with us. We will be providing the presentations tonight. We'll make them available on our website, both myself and David, so you'll be free to download them afterwards. Great. Let me introduce myself. My name is Devin Shutte. I'm the CEO of Regenesys Investments. For those of you who maybe haven't attended one of our meetings before, just a bit of background. We're basically an asset management and stock brokerage company sitting inside the Regenesys Business School. Now, this might not make sense initially, but really our purpose and why we're here is very clear. We are here to provide knowledge and to help people to enter the world of the financial markets, to break fears, and to be able to give you the tools to invest in the market. We really find that the average South African is often just intimidated by the markets. They don't understand the jargon, and as a result, end up not investing at all in the market. So our role is very much to provide the information, to provide you with the tools to be able to take that first step into investing if you haven't done already. So it really is great to have all of you here. We will run through some interesting learning topics tonight. We'll look at some jargon, we'll look at what's been happening in the market over the last month, and then we'll hand over to David for the second half of the evening, where he will really share his insights and experiences, which I'm sure we're all looking forward to. As far as our offering as Regenesys Investment goes, we are very keen on the education side, obviously sitting in a business school, and that takes the form of meetings like we're having here this evening, which is a great opportunity for you to come, to ask questions, to be inspired by our speakers. And we also offer more formal courses that we run. Some of them run for a full day, and these all will really give you a comprehensive introduction to the financial markets. Will tell you what a share is, why companies would want to issue shares, and that type of thing. So the education side is very strong. For those of you that are on our database, you'll know the morning email that you get, and we give you a brief summary of what's happened in the South African stock exchange, what's happened in overseas markets, what's driving markets. And you'll find by getting these emails on a day-to-day basis that you'll start to understand, start to follow shares more and become more involved in the process. And that's really what we're trying to achieve here at Regenesys Investments. It's not for you to simply say, well, this is my investment, here, take it, tell me if I've made money at the end of the year. No, we want you to be involved in the process. Yes, we will advise you. Yes, we will give you the tools. Yes, we will help you with the knowledge. But ultimately, it's each and every one of our responsibilities to be responsible for our capital and to ultimately invest wisely. And we need to break fears. We need to break misconceptions about the equity markets and the fact that it's only risky. And we need to look discerningly at it as an opportunity to generate capital and achieve wealth and ultimately financial freedom. So we offer a number of products that satisfy that, everything from short-term trading accounts, CFDs, where we look to take advantage of short-term movements in the market, to longer-term traditional equity portfolios, where we buy a basket of shares and hold them over a longer period. And we're also looking for those of you, and we've had a few inquiries about this, those of you wanting to contribute on a monthly basis. We're looking to list our own Regenesys unit trust shortly, where you'll be able to contribute monthly, build up capital, and really be involved in the investment process with a very small outlay. So all that information is available on our website. You're also welcome to set up meetings with us, and we can discuss that with you guys in more detail. Great, you guys with me so far? Yes. All right, let's get into some of the recent events in our markets. There's been a lot happening. We met just over a month ago, and there really has been a lot of news in the financial markets that affects each and every one of us. I mean, we've been inundated with stories of the strike, etc. And I thought it would be a good opportunity to quickly unpack a few of these important developments that have happened recently and why they're potentially important to you, regardless of if you're investing or not. So we look at the first point up there, the South African debt downgrade. What does this mean? This was almost a direct result of the platinum strike. And what this means is that the rating agencies, which are global international companies that look at the creditworthiness of governments, saw South Africa as a higher risk investment, based one on the turmoil that we have in the mining industry at the moment, particularly the platinum sector, and two, the lower growth that we're experiencing. And we'll go into that in a bit more detail later. So what that meant is the creditworthiness of the South African government went down. The South African debt was downgraded, and as a result, it became more expensive for the South African government to lend money. Now, what does that mean? Is that the platinum strike, a strike concentrated with under 100,000 workers in a very specific area in our country, has ultimately meant that our government that oversees 50 million people now has to pay more for their lending. So there's been a massive knock-on effect of that. And the estimations are, if we look at the platinum strike, the costs of the platinum strike are catastrophic. The direct cost, 20 billion rand, the mines lost. More than 10 billion rand, the workers lost in foregone wages. And the government lost around 5 billion directly with loss of taxes from those companies and those individual miners. Now that doesn't even take into account the secondary taxes from VAT and that all those miners would be spending if they were earning their salaries. And we can just see the knock-on effect that the strike has had on the government, and ultimately, and probably more importantly, is the perception, the international investor perception of South Africa. I mean, we've got to remember that international investment flows are particularly fickle, and by that I mean if they see the risk of investing in South Africa higher than the potential return they can make, the money will go elsewhere. And it just has put another check against South Africa's name in terms of how the last labor negotiations happened. So then we fast forward to today. The platinum strike was resolved last week. Today we've now got the National Union of Metal Workers South Africa going on strike. Now this is over 200,000 workers, and for 1 second, don't discount the plight of these workers. But what we've got to look at is the effect of labor or workers working against their employers, because ultimately their interests are aligned, but the landscape at the moment hasn't been conducive to that. So it's a them or us mentality, and as a result, like we saw in the platinum strike, it becomes a lose-lose scenario. The miners lost, the mines lost, the government lost, and the economy as a whole loses. So we really do have to now, and I think finally, because of the severity of the crisis, government is grappling with this, look at a way to address labor relations and make the negotiations more productive, because the way they stand is destructive. So the platinum strike that we've seen, potentially the metal workers strike, I hope not, is the most devastating strike, arguably, that South Africa has ever seen. It will re-change the landscape of labor and negotiation. So we're sitting in this really tumultuous environment in uncharted territory, and we've got to look as investors or potential investors and look for opportunity or identify risk and position ourselves accordingly. So something that might not be directly related to you who aren't investing still has an impact. This downgrade is a direct result of the platinum strike and will ultimately affect government borrowing and the economy and each and every one of us. But then what do we have today? The JSE All Share Index, the Johannesburg Stock Exchange, reached a new all-time high today. We spoke about it at the last meeting, how the JSE All Share Index has been up, well, it's now closer to 180% since the lows 6 years ago. Now, why is that? And some of the reasons are quite plain to see, is that you've got very good companies operating in a low growth environment in South Africa at the moment that continue to generate profits. The problem is the sustainability of those profits. If the average South African, which includes everyone here, is struggling more, if there's less disposable income, if everything is becoming more and more expensive every month when we go to the shops, that effect will ultimately leak into the stock market. So we've really got to be very aware of the position the stock market is in at the moment. It's not to say it's unsustainable. Growth could improve in South Africa, but ultimately something's got to give. So we really have to look at the full environment, the growth of the South African economy, as well as where the stock market is, and decide where we want to be positioned. A lot of people are calling our stock market quite expensive at the moment. That is true and that is possible, but we haven't seen the market move down any significant magnitude for probably close on 6 years. So we have to, as investors, look at what we see and try see through and see what the opportunities would be in that. From the short-term trading side, it has been good because we've seen opportunities to buy shares that have continued to move higher. That's great. On the longer term equity portfolio, someone who's just looking to start and invest now, things do look quite expensive. So on a historical basis, we would caution investors to look for quality companies, but possibly wait for better valuations before getting involved there. So a very interesting dynamic we have at the moment, a stock market that is racing ahead and an economy that's really fumbling and struggling to gain any real traction. And that brings us to the last point on the slide, which is the SA GDP. So Stats SA released the growth figures for South Africa for the first quarter of 2014, and they were shocking. They surprised a lot of people. A lot of it a direct result of the strike, and the GDP actually turned negative. And I've got a chart I just want to show you guys quickly here, because I think it's important to see. The numbers are small, but these are every quarterly bars from 2011. This is 4%, this is 0 and -1. And you can see how the South African economy has ticked along at 2.5% growth on average. And then what did we get last quarter? We went negative, 0.6%. Now, one quarter is not a disaster, but it's a huge, huge warning light for our politicians and the powers that be, that we haven't managed to get ourselves on track. We haven't put ourselves on a growth path or a growth trajectory that we can take advantage of the potential recovery in markets. If you look at some other economies like the US or the UK, that trend looks very different. That trend is starting to move up. That trend is starting to accelerate. And that's what you would expect 6 years out of a major financial crisis. But we're not seeing that in South Africa yet. So we've got to be very cognizant that we're starting to miss some opportunities. And it's a responsibility of the citizens of South Africa, business and government, to align those interests to be able to move that growth trajectory up again. Because this can continue. What happens if the South African government credit or bonds gets downgraded again? That means South Africa is now no longer viewed as investment grade from their bonds, and then we see a whole massive outflow of capital. So things are bad. They're not beyond repair. But I just want you guys to kind of orientate yourself where we're sitting at the moment, what's happened in the last month alone that is massively influential, potentially, on where our economy will go in 6 to 12 months' time. Are you guys with me on that? All right, so let's take it back to the stock market. I thought I would do a quick exercise. We have just closed off the first half of the year. Can you believe it? We're already into the second half of 2014. And it's a good time to look at individual share performance. So I pulled some share names that have done exceedingly well in the first 6 months, and some that have done exceedingly poorly. And I just want to know if anyone, any ideas, what shares do you think have done poorly this year, based on what you've heard around, that type of thing? What is that? Able, African Bank. Good guess, why? Well, because they're unsecured lenders, African Bank, we might or might not know it. These people lend short-term loans to people at exorbitantly high rates. The problem is that the company had bad debts that continue to escalate. The platinum strike directly impacted Able. You have a group of tens of thousands of miners who might be using these short-term loans to fund their lifestyle till the next paycheck. They now don't get a paycheck for 5 months, and they become bad debt, and as a result, a company like Able wins it. So yeah, great guess on that. Anyone else want to venture maybe on one of the better performance for the 6 months? Maybe. It was good. Our banks did very well the first half, but not the star performance. Well, let me share with you. African Bank out of interest rate was down 45% in the first 6 months of this year. It's actually a lot worse. The share was trading at 40 Rand probably 18 months ago. It's now trading at 6 Rand. So the company has really been hammered. They no longer pay a dividend. They used to be one of the best dividend paying shares in the country they're now on. Pinnacle Holding, another good reason for the performance there. You guys might have heard about the scandal there. One of the directors tried to bribe someone. He then, when the company was going to declare and announce that he'd been caught for bribery, he sold the shares ahead of time. And so the company, Pinnacle Technologies, are very involved in the IT space, a lot of government contracts. Investors have sold the share aggressively, and probably with good reason. There's cause for concern there that they might lose their contracts. So that's the bad news. But the good news, I mean, look at this. In 6 months, Sibanye Gold, which was part of the old gold fields, up 138%. I mean, it's phenomenal performance. Some shares won't do that in 10 years. That's a standout performer. There's not that much company-specific news on it. The gold price was up nicely during the time, but that's an interesting one to note. And then Telkom, which has really been an underperformer for many years. There's talk of a turnaround strategy there. There's talk of efficiencies coming through, better management. They had one little scandal with their CFO and insider trading, but market seems to have forgiven them. Up 64% year to date. Phenomenal performance. And then another gold share, Anglo Gold Ashanti. So you can really see, just in 6 months, the divergence between performances in the different sectors that we've been looking at. So very crucial for those of you who are trading and investing out there to do your homework, to get the right advice, to understand the companies you're trading in and assess the risk. African Bank was a favorite of many, but the writing was on the wall for the long time, and it didn't just go from 40 Rand to 6 Rand in a straight line. There were signs there. Lots of people have actually made money by taking advantage of the share on the move down. Okay, so some big moves in the first 6 months. I thought what I would do in the next section is give you guys a bit of an understanding, maybe for those of you that don't know how the financial markets as a whole fits in. Because I think oftentimes we're talking about shares and what the rand's doing, that type of thing. But what is the landscape? How does it all fit in? So we've defined it on the slide as the financial markets being a marketplace where buyers and sellers participate in trade. And it is exactly that. It's really like a market or an auction where you've got buyers coming in, willing to pay a certain price for an asset, and sellers coming in, willing to sell at a certain price. And once they meet at a combined price, that is when a trade will take place, and that can take that trade can happen across many different assets. Shares is really our focus, and we'll go into that in a lot more detail. But when we hear the financial markets, we really need to think of it as buyers and sellers, whether it's a pension fund or an asset manager like Old Mutual or Allen Gray or a private investor looking to buy some shares. all of these buyers and sellers are pulled together in a common central marketplace that is transparent, and the prices are disseminated electronically, that we can then see the trades happening, that we can then see the value of a share, of a commodity, etc. So it's a massively important tool, and one that we need to utilize. It's got a huge amount of advantages. One is that you're protected because it's regulated. So it's not the case of you own 1,000 MTN shares, you've now got to wander the streets and go into office blocks and find someone who wants to sell the MTN shares. Not at all. You know that MTN trades at this price because it's a publicly traded company and that information is available to you. And there are a number of willing sellers at a price, and if you're happy with that price, you two can come to an agreement on an electronic screen and trade. So that's very important. It's highly regulated as well. There's a lot of oversight to protect investors, and again, important. It's not a private sale, but it's something that's done publicly. Liquidity, I put that in there. Basically, it just allows you to buy and sell shares or another asset class with a fair amount of ease. You don't have to, as within a property, which is termed a more illiquid asset, you don't have to go out looking for a potential buyer for your share. They're there, they advertise in the market, and you know what the price is. So there's an ease of transaction. And then, really an important function of the financial markets is to channel savings to investors, savings to investments. So what that means is that you've got private individuals and companies and governments who have excess capital. They want to invest it somewhere to earn a return. And on the other side, you've got companies and individuals, investors who want to borrow money for expansion and projects and are willing to pay the savers or the investors a return for that. So that transfer of capital is critically important. And that happens in this big bazaar, this big flea market called the financial markets. Are you guys with me on that? I think it's important to just understand that it's a very centralized marketplace. There's no longer a physical marketplace like the old JC in Diagonal Street where all the traders used to go and shout at each other and wave the papers. It is now all done electronically. The JC is just really a mainframe where all these electronic intentions to buy or sell are matched in their what's called an order book. So what I thought I would do is just show you guys an electronic order book, because I think it's important to try and understand for a share. If you have buyers and sellers coming into this shared space and they want to trade, what does it look like? So I took a screenshot of what we call a JSE order book or market depth. For those of you at the back, it's probably going to be too small, but I just want to show you guys the important part. You've got the buyers that line up here very nicely and orderly. They're called the bidders, and the sellers or the ask lining up that side. And what happens is it's exactly like an auction. If you're a buyer, in this case it's a share called Ellie's. If you're a buyer and you're willing to buy at the highest price, you'll get preference and stand in front of the queue. And that is what you see with our buyers sitting here. Is there's a buyer at $360, and he is the best buyer or the best bid. So he gets preference, and he sits at the top, and the number of shares he wants to buy is also advertised. You then get the sellers that line up on the other side, and the seller who's willing to sell at the lowest price will also get preference, and he will sit at the front of the queue. So you can see here how the sellers go from 392 to 380, and the best seller is at 365. So you've got a seller willing to sell the share at R3.65 and a buyer willing to buy at R3.60. When one of them decide to move to the other price, that's when a trade happens, and that's what we see reported, and that's what will go into your charting system, or if you're monitoring it on Bloomberg on your phone, and that's called a match or fill, and that's how a trade happens. So it's actually people putting in orders in the market, and this auction taking place, and a buyer saying, okay, I'm willing to buy from the best seller at R3.65, I like that price, and he buys those shares there. So I think we need to understand that the financial markets is constituted and made up of individuals acting on behalf of these big institutions, all in one centralized marketplace. Are you guys with me on that? It's something that bears understanding, because when we understand the way that the auction system works, then we understand that it's a very fair and transparent system for each and every one of us to be able to place an order online and know that you have as much priority trading your 100 ShopRite shares as Old Mutual that might be buying 50 million shares. If you have the best price, you will get the priority in that way. And that is what the JSE looks like today. It's anonymous, so you won't know who's sitting here, and you'll see, for those of you that are closer, the volumes of the number of shares. You'll be able to see the bigger orders in the market. Some of those might also be hidden, but it really is a level playing field. And we're seeing the financial markets move to benefit private investors, where you can go and place your trades online and play in that central marketplace. Good. All right. Let's look at what asset classes are available. So I put it in the Jargon Busters section, and for those of you that have been at these meetings, we really try to demystify the jargon around financial markets, because there's a lot of it, and it really ends up confusing people, and we could often say it a lot simpler. So here we've got what are called asset classes, and all these are, when we spoke about the financial markets, is the various types of investments that you could potentially invest in and that trade in a common marketplace. So oftentimes people will have a portfolio that consists of these various assets, and I thought it bears just going through some of the properties of each of these asset classes for you guys, so that when you hear them spoke about and detailed on financial media, that it makes a bit more sense. So one of the asset classes is commodities. So by this we mean commodities. They can be hard or soft. So this would be your gold price that we hear quoted on a daily basis on the radio, the oil price, which affects each and every one of us when we fill up our car. It can go through to things like coffee beans and orange juice and live cattle that are actually traded on exchanges around the world. These are all commodities and can form investment products that potentially we can invest in online. So commodities are something that are not as popular maybe as the shares are, but definitely available. In South Africa, a very popular commodity to trade is the agricultural commodities, wheat and maize. A lot of farmers trade these more from a hedging point of view. So if a farmer is expecting his crop in a few months' time, and he knows he's going to produce this many tons, he can secure the price for his crop in 3 months' time today through the commodity market, through the futures market. And that's a massive tool and a practical tool that someone who might not be viewed as an investment professional would use in that commodity market. You guys with me on that? Great. Then currencies, also known as forex. I think South Africans, probably like most countries, are obsessed with where the rand is trading against the dollar. We hear it every half an hour on the radio, in our cars, and all this is a price of one currency against another. So the dollar rand or the rand dollar is probably the most commonly known one to us as South Africans. But you get most countries will have a currency pair with another country. Now, what's interesting about the currency market, it also trades online. You will also see a similar order book like we saw for Ellie's there, is that it is a massive, massive market. To give you an idea, $4 trillion worth of forex trade every single day on the world's market. $4 trillion. It's over 40 trillion rand. Now, bear in mind, SARS wants to take in R1 trillion for the whole year next year. It is a massive number, and that trade changes hands on a daily basis. So that's phenomenal. And if you dig down into those numbers a little deeper, only 15% of that 4 trillion is from people buying and selling goods. So from importers, paying for their goods in dollars, etc. The rest is all from traders and speculators and hedgers trading in this hugely liquid market, which we have there. So it's a fascinating market to look at. Currencies affect a lot of industries. It affects the platinum industry, which we spoke about earlier. Why? Because the platinum miners pull out the platinum. They have their costs in rands, so they pay their workers in rands, their suppliers in rands. They will then sell their platinum offshore. They will then receive dollars. So a weaker rand or a stronger dollar actually benefits some people, like the miners. But the converse can also be true. So I just want to show you with these different investment and asset classes how they are starting to interrelate to some of our investments and even just our day-to-day lives. All right, good. Then bonds. Just quickly on bonds, they're quite technical. We spoke about the South African credit downgrade, and that was simply the South African government, when they loan money from institutions, from investors, they do it in the form of bonds. And they will take money from those investors and they will pay them an annual interest rate and eventually repay them their capital. Now, governments can do this, companies can do this, municipalities can do this, and parastatals can do this. So we've got Eskom bonds, we've got Transnet bonds, we've got Sanral bonds, we've got African bank bonds as well, interestingly enough. And all of these will compensate the investors for the use of their capital in the form of an interest rate. Now, the more safe your investment is, the lower the interest rate is, the more risky your investment is, the higher the interest rate. So as an example, a government bond, if we're looking in South Africa, would be viewed as the safest bond, and there you would be earning a lower interest rate in an African bank bond, where your yield or your interest you would get for loaning African bank money as opposed to loaning South African government money would be a lot higher in the African bank bonds. You guys with me on that? So that is another asset class that can form part of an overall portfolio and that has an effect on these other asset classes. Then the one we all know, equities, shares, stocks. Essentially, this is a medium for companies to raise money, and what they do is they essentially sell ownership in their company to be able to raise money for expansion and acquisition. So we just learned that companies can also do that with bonds, but oftentimes equities is the favored medium for this. So, as an example, and we were having the discussion earlier, what is very important to understand when you own shares is that you are actually taking ownership in the company you own those shares. So you can be a part owner of MTN or South African Breweries or ShopRite or Woolworths by owning those shares. You can go to the annual general meeting. You can vote on resolutions. You can put up your hand and ask the CEO why he's getting a 30% pay increase because you are a part owner of that company. And I think oftentimes when we look at the stock market and we see the overall moves, and we know we had a crash 6 years ago, that we get scared and we just look at risk, but we don't see the fantastic opportunity that we have as individuals to be able to own some of the best companies in the world. And I think that's a message that bears repeating. We had a speaker from Saxo a few months ago who made the point very well. And I think we need to see the perceived risk of equities, because there is risk, in context to say that yes, there is risk, but with that risk brings the opportunity of massive capital appreciation and massive opportunity of being involved in some of these companies. I mean, South Africa has got a great landscape and history of companies that become world leaders. I mean, we look at, there was a story in the news this week, Old Mutual, started in South Africa, started in Sandton in Cape Town, been around for over 100 years, moved its head offices to UK. Now it is listing in the US market, a massive asset management business that is now basically a household name around the world, started in South Africa. South African Breweries, the world's second biggest brewer, South African company, Anglo-American. There are there are many, many stories, and I think we don't realize the opportunity and the privilege we have to be able to invest in these companies. Obviously, it does take a lot of diligence. It does take a lot of work behind the scenes, but the opportunity is there for all of us. Can I just get a show of hands in the audience? Who's bought a share before? Who owns a share at the moment? Okay, so a good deal of us have been involved in that. Okay, that's what it's. You guys with me? Any questions so far on this? Nothing. Sorry, no, they were just listed there. There is another potential asset class, property. It's very popular in South Africa. It arguably can form part of a portfolio. You can buy listed property, so you can buy a stake in a company that owns a string of office parks, commercial properties, and as they generate their rentals on that, you can participate in that. But what we find in South Africa is a very strong move towards people owning their own property or investment properties. People like to do that, and while there's nothing wrong with this, we need to analyze property as a potential investment. I didn't put it on here. What does property have as an advantage? One, it is a asset you can see and feel. People like that. You can't see and feel a share, and as a result, that makes people uncomfortable. You can earn a yield or a rental or an interest rate on a property, fantastic. But what are the drawbacks of property? One is what we spoke about earlier, and that is liquidity. And that you have to, when you want to sell your property, you have to find someone that's willing to buy it at the price you stipulate. That can be a problem, and it can cause you to sometimes sell at a lower price. Two, we're also looking at costs. Property, you're going to be entering with transfer fees and lawyers' fees and the rest, probably about 8% when you buy the property, and depending on your state agent when you sell it, about 5%. So that's 13% cost that you need to take into account on that potential investment. Now that's a lot when you compare it with shares. You can probably trade at 0.5%. So 0.5% when you buy and 0.5% when you sell, to hundreds and thousands of buyers on a daily basis. So you guys can start to see the benefit of liquidity as a potential investment. That's not to say property doesn't have a place. It definitely does. But we need to open our minds and our thoughts and see that there are more opportunities. And maybe we don't fully understand the financial markets and understand the equity market, but evenings like this are good opportunities to start that process and start to look what sources are available to me to be able to understand the investments that are out there. All right, you guys with me so far? Good. We're just about at the end of my spot. David will join us in a sec. Okay, we are actually at the end of my spot. How are we doing for time? Just gone for the 2. He'll be in a few minutes. Any questions up till now before the guest speaker comes up? Yes, sir. Yes, I'd just like to ask, in regards to the equities market, with your worst performance, you had African Bank listed earlier, down 45%. Would you recommend getting into that stock going forward, or how do you see African Bank going forward? As an investment? Yeah. Look, I think that at African Bank, when you get these extreme moves, it provides opportunity. So you need to ask yourself the question, is African Bank going to exist as a company in 5 years' time? My answer to that would be probably yes. So then you've got to ask yourself the question, where would you buy the share? And trading at 6 Rand, trading on a 3 PE, which means you should be able to recoup your money in profits in 3 years' time, massively undervalued. Yeah, I think it's time to start looking at it. I think it's going to be a bumpy ride. The share is still wild at the moment. It's moving 5-6% on a daily basis. But as you said, if it's an investment and you're looking for the next 3 to 5 years, yeah, I think there's opportunity there, no doubt. Yeah. Thank you. Yes, sir.
Why would, as an example, applicants sell bonds instead of shares or shares?
Well, they do both. So African Bank has done both. So they had a massive problem on their balance sheet in that they needed a few $100 million. So they went to shareholders. I think they went to them twice, and what they did is they said, you can own more shares in our company, but you then have to buy them at a discounted price. So they did that, and they also issued bonds. So they've done a combination of both. Yeah. Any other questions there? Yes, sir.
So for new investors, what are some of the key mediums for due diligence, especially when you're trying to invest in any of those?
In the various asset classes?
Yes.
So what you've got to look at is the risk-return profile on these. So you're probably looking at the higher risk returns in commodities, currencies, and equities. Bonds being safe, and then ultimately cash or money markets being the safest. And a combination of those works well. It's something that's quite a subjective process. And particularly the younger you are and the longer your investment time horizon, the more risk you can take on and then start to allocate more to equities. Yeah. Thank you. Shall we take those last two questions and I'm going to hand over to Dave. Yes, sir. The one in front.
To the first question, this is my first attendance to this or what you are offering, but I just want to find out what is it that Regenesys is doing on the financial market to educate people, different from those who are selling, because now I've been having some presentation with others, people say that they can sell with a tool to use, which is a CD, and actually get into the financial or JSE and see how other companies are doing. And now, what is it, and also what is it, and what does it take for one to involve himself into the club?
Okay. Thanks for the question. Okay, so the investment club is open to all, and the reason we started the investment club is to provide a non-threatening environment for people to come and ask the basic questions and learn together and challenge each other and grow. So we don't charge for that. That's very important. We also sit under the business school as a holding company, so we're able to leverage off that academic background and really provide what we believe are excellent programs, services, etc. And I think ultimately it comes down to our motivation, is that we really believe it's our responsibility to provide knowledge for people to break their fears, to start their path in investing, and ultimately achieve financial freedom. And as a result, we can help them with investment products, but our goal is to bring people in to the financial markets that previously maybe haven't even thought about it or didn't know how to start, and let them start on that journey and grow with us. Does that answer your question? Yeah. Thank you for that. Last one there, sir, and then we'll hand over.
Yeah. I have two questions.
Sure.
The first one is about it's called the black box model, where you can long and short at the same time.
Yeah.
But in two different markets.
Yeah.
How legal is it? And secondly, with regards to the risk factor, is there a way to create a margin of safety with some form of a cushion against the risk factor embedded in the stock?
Okay, so let me speak to your first one. You spoke about two concepts, long and short. Something that often hedge funds would employ. And what that is, it's called the market neutral strategy. So when you go long, you're buying a company hoping for a move up in price. And when you go short, you're actually selling a share you don't own, hoping the share price moves down. So that's definitely legal. It's their hedge fund where that is their pure strategy. And what they would be doing is typically looking for shares that previously moved together historically, so say two banks, and they'd seen a wide divergence, and they would expect those shares to again follow that course and move it. So absolutely, it's a strategy that can be employed, and you can do that often through the use of derivatives like a CFD. Your second question, just clarify that for me.
Is there a way to create a margin of safety or some form of a cushion against the risk element?
Yep. There's a lot of risk management techniques you can use. There's stop losses where you can limit the risk on a trade. Oftentimes, however, it's better to do the work ahead of time, do the research ahead of time, and to mitigate as many of those risks through knowledge and through a thorough research process to reduce the risk of things happening while you're in a trade or an investment. Unfortunately, we can't exclude it completely, and you do need to take on some risk in an equity investment as an example, but that risk will often reward you with a higher return in other assets.